Review of mortgage process flow. That's another thing I wanted to talk about just because I feel like I get that question a lot. Is like, how does it work on your side? And so I'm going to go over it, and I hope this gives clarity. It's probably already stuff that you guys heard, but maybe I say something that you haven't heard, kind of like the 10-year treasury note. So review of mortgage process flow. Pre-approval is the first step, and in that step right there, pretty much everything should be known. The only thing that won't be known in that step is if someone is straight up lying, which most of that can be known too because it's all documented. But the only, I get calls all the time like, hey, my deal's falling apart. Can you save it? And I'm like, well, what's going on? And they tell me, and I'm like, well, that's like a day one thing right there. Like you should have known that day one. Pretty much everything can be known day one. The only thing you're not going to know is if someone's buying another property at the same time and they didn't tell you. That happened to me. I had a guy, he was trying to buy a property at the same time he was buying another property. That's the only thing you won't know. That actually I've been hit with because everything else should be known. The other thing that I had a friend run into was that he asked the guy if he had to pay any child support, and the guy said yes, I pay this amount of child support. But when underwriters have a program, I forget the name of right now, but they have this program that they run that scrubs all public records like across the nation. It's insane. And they scrubbed it, and they found this guy had 2 other child support payments that he was supposed to be making to some other people, and he didn't disclose that, and there was no way to have known that. But like most of the time, if it's an income related thing, like, hey, we were using this income and it should have been this income, that type of stuff, it needs to be basically underwritten up front. Like before we got on this phone call, I've got a sheriff that I'm trying to get pre-approved, and pretty basic income, but I might be off by about like $100 a month, and his qualifying is super tight. So I sent that off before sending a pre-approval letter. Before sending that, I sent that off to have that income. I just needed a second pair of eyes on it. So I sent it to an underwriting manager, and I was like, hey, here's what I'm using. What would you use? And I'll get that answer. And if I don't like that answer, I'll probably send it to somebody else. Like you, as a loan officer, you should know your file like the back of your hand going into it. So as a real estate agent, how do you guys look for that, or how do you guys? It's tough, right? Because you're trusting the word of a loan officer. So asking the questions of like, if it's someone you work with, obviously it might be a little different. But if it's like you get a pre-approval letter from a client, they're like, hey, I'm pre-approved, you're like, well, I don't know this loan officer. So you call them and you're like, hey, have you gotten their documents? And then it's probably a little tough for you guys to ask these questions. Like I can go super deep, super fast. Like, are they hourly or are they salary? Did you calculate that hourly properly? Is it off of 40 hours a week? Is it off of 36 hours a week? Did you look at the W-2s from the prior years to see if we have declining income? So it might be tough for you guys to ask these questions, but I would try to press in as much as I can. Like, do we have pay stubs? Do we have W-2s? Did you, do we have any questions on income calc? Because I don't think those questions are too personal. I think it's just asking that loan officer if he did his job. But anyway, so pre-approval, like pretty much everything should be known at that point. Once you have your pre-approval letter, you can pretty much take that to the bank. That's how the process should work. Now, once you go under contract, for me, I want to get that contract like right away. Don't wait for inspections. If it's executed, send it over, because as you saw with the rates, like I want to get that thing as soon as possible so we can get that rate locked in. I want to get the files disclosed, right? So on our side, we want to disclose that file right away. Like I talked to somebody yesterday, he's closing February 13th and he's still rate shopping. And I'm like, well, just send me your loan estimate. And he's like, I never got one of those. I'm like, you did, brother. You did. You got a loan estimate. You got a loan package. You had to have got one. He's like, I swear to you, I didn't get one. That's happening like within the first 3 days of going under contract. They have to get a loan disclosure package or that lender's out of compliance. So again, for me, I want to get the loan disclosures out right away. On that is going to be their loan estimate. And from a numbers perspective, guys, because disclosures go out through the entire process, it's the most annoying thing in the entire world that these disclosures go out through the process because it's not regulated. I mean, it is regulated in the sense that like the government makes these things go out, but they don't make you, they don't require that the numbers be accurate. So these disclosures are triggering automatically, which may confuse your clients. So always reference them back to the initial loan estimate. And that's what I do. I'm like, hey, let's look at the initial loan estimate. We'll go off of this right here because the disclosure you just got, it probably doesn't have title work in there. They probably pulled that out. The escrows are probably pulled out because they're underwriting the file, right? there working on that file right there. The loan disclosures go out, client finds the loan disclosures, and at that point, that file can be submitted to underwriting. And this is the freaking gold right there. Underwriting is you want to get that contract, get it disclosed, and get it in underwriting. That can all happen within 24 hours. I mean, like max 72 hours. Some lenders don't do that. Some lenders sit on the file because they want to do what's called a one-touch submission, meaning that they've got everything that they need, they send it in, and then the underwriter comes back and says, you're cleared to close, which in a magical universe, that sounds phenomenal. But there are so many different variables to this process that that's the worst idea ever, because it's a really good idea from a productivity standpoint from an underwriting team. If they only have to touch a file once, they're saving a ton of money by doing that, but you're leaving yourself open to so many problems. There's so many client documents that you have to submit. And if one of those client documents opens up a can of worms or requires an additional document, which is very, very common, you've now put yourself behind the 8 ball because you sat on this file for so long. And that's another problem that I see. It's like we're 3 days from closing, now they're asking for all this stuff. But yeah, you have to make sure that lender is going to submit that file to underwriting off the rip. Again, pre-approval, you should have everything. And then once you get that contract, now you've really got everything. So you can just submit that thing into underwriting. The underwriter is going to say, you are conditionally approved based off of this list of items. And this list is what scares processors, mortgage people, because it's so much work, but it's really not, because now the underwriter is who is going to approve or deny your loan. So why would you leave it up to yourself to think that you know what's going to get approved or denied, right? So hopefully I'm educating you guys on this, that you want to submit to underwriting, that you want to make sure that when you're working with a client, you're working with a buyer, or maybe it's your listing and you're tracking this, that the file is going to underwriting right away. And once you do get that conditional loan approval, that should be another thing, hey, do we have that conditional loan approval yet? Then the question is, how do the conditions look? I've had some listing agents and some buying agents ask me what conditions do we have, which I think is a little, I don't know if we can answer that question, just because I don't know if I can tell you this client's bank statements and stuff like that, and if they have a 401k or an IRA. But as a real estate agent, I think you can ask, how do the conditions look? Are there any deal killing conditions? Are there any income conditions that could change income, right? Because that's really it. Once you got your conditional approval, it's done. Now you're just waiting for that appraisal to come in, right? There's stuff you have to do in the conditional approval, but as long as there's no deal killing conditions, a loan can close in 10 days. A loan can close in 5 days. That's the process. Loan disclosures, get it submitted to underwriting, get your conditional loan approval, and just work on clearing that, out those conditions, and then you close. And then there's other stuff too, like TRID, making sure your CD goes out. But I mean, we've all been dealing with TRID for so long now that's pretty I haven't really seen problems with TRID lately. We just had one yesterday, because it's a long story, but anymore the client can print out a closing disclosure and they can sign it by hand. And so we just had to do that and send it back in. It didn't mess up closing or anything. That's what I mean. TRID's not really like a deal killer anymore.